Hey folks, my guest today is Nicolas Vandenberg. He's building a tool called ChiliPiper.com. He helps you automate lead qualification, routing, and scheduling. Nicolas, you ready to take us to the top?
Let's do it.
Now, last time I saw you was pre-COVID in New York. I think it was 2018, 2019. We had our little CEO mastermind, and you were talking about breaking $1 million run rate and how excited you were. And now you're like, you exploded. What the hell happened?
Yes, a lot of things happen. Yeah, it's been a different world. Well, when COVID happened, we it's all sorts of advice from our investors to lay off people and cut costs and all that. And Alina and I felt strongly that we had built a beautiful team and we shouldn't do that. So we actually applied for that payroll protection program from the US government, thinking at least, we'll survive and we don't lay off anybody. And the opposite of what everybody expected happened. Our company actually grew faster. A lot of people came to us and needed to do more things online. We doubled inbound conversion rates, so who wouldn't want that? For inbound. So next thing, we went from fearing for our life to getting tons of interest from VCs. Literally 3 months later. So in June we did our A round. We had bootstrapped all the way because we were cash positive and we never found an offer that was attractive enough. But this time the VCs were serious about investing, and Base 10 gave us a very strong offer. So next thing, we took a 15 million A round.
And it was what was the pre-money on that?
It was the post was close to 75. So it was 15 on north of 55. And then we
60 pre, 75 post.
Yeah, and then we kept growing. Even as you can imagine, when you bootstrap for a long time, all of a sudden you have money, you can invest beyond what you were doing, and then things go better. So unsolicited in March, we got an interest from Tiger Global. I got on a call with John Curtis. And literally, he made the offer on the fly. Later the evening, we had a term sheet. 2 weeks later, with the money for 33 million B round. Mm-hmm. So now we're definitely growing faster than we used to, as you can imagine, with this money to invest. We passed 150 employees. We actually passed the 10 million mark earlier this year. So we're not aiming for the 20 million mark. That's where we're aiming for.
Was MRR last month, Nicolas?
I always think on run rate annual. So we know between 10 and 15.
Got it. Okay. And you think you'll hit 20 by the end of the year?
Well, that's the plan. Yeah.
Yeah. Interesting. Real quick, when you bootstrap a company to the scale that you and Elena, and by the way, guys, this is a great story because Nicolas, I'm saying this, Elena is your wife, right?
Yeah, she's my wife and co-founder. That's right.
Your wife and co-founder. And then you guys split it 50-50 back in 2016 when you launched?
Yeah, that's right. We did. Yeah.
That's impressive. And you're still married and things are still good today. So these are all
wonderful.
Good.
Yeah. Like she's going to show up to say hi.
Hey, Elena, how are you? It's good to see you. I love that. This is such a good story because I remember when we were in New York, you were really only doing, from what I remember, scheduling. Like I would see people send me a scheduling and get say powered by ChiliPiper. Now you're expanding the product.
That's a very interesting observation you make. It's actually not the case. But the scheduling piece is the visible part of what we do. So that's how people associate us with scheduling. Our product is really about a very simple problem. When you go to a website, you want to talk to somebody, you want to see a demo, you submit a form, and typically you get a thank you page. Say thank you, somebody's going to call you. And there are people whose job they call inbound SDRs to call you and schedule that call. It turns out that company are happy to convert at 40%, which means that they lose 60 out of 100 of these requests. And they think it's good because they compare that to the outbound where you're trying to get meetings and you get 3% or 2%. So 40% seems like so good that you send emails and you get so many meetings. But the reality is these people already said they wanted a meeting. So that's the problem we solve. And the hard problem with that is that the form is typically tied to the marketing system. It's a very critical part of the marketing system because it's where you know you can tie back the visit to all these actions they've done to a particular person. And the follow-up is done in Salesforce or in the CRM. So you had the gap between these two systems. So it was a very hard problem to solve to automate that process. So that's what we did. We integrate with forms from marketing automation systems to, in real time, get the data, possibly data augment, qualify, route, and retrieve the calendar. But all that, and then book a meeting. And what happened is that all our customers double their inbound conversion rate. So they go from 40 to 80%, or from 20, some went from 23% to 75%, right? In the SMB business, they lose a lot of their requests. But the hard part is not to show a calendar. The hard part is to do the real-time qualification and routing, right? With all the logic that needs to come with it. And also, you don't want to interfere with the marketing automation form. So we think of ourselves as an inbound automation, but people, when they see ChiliPiper, they see the calendar, and like you did, right? So you think, oh, you're scheduling, you're a scheduling company, and seriously, no, we a company that does all the hard thing to get to scheduling, and then end the scheduling piece. And now we see that. There are other pieces that need to happen around inbound. So we're expanding our solution around inbound. And that's what we're going to be doing for the second half of the year. Other things around inbound conversion, where we see a lot of opportunities to do the job better than what the legacy system are doing.
I want to talk about your other products, including Chili Events, which is an interesting space. Very frothy valuations from Hopin, Bizzabo, VFairs in that space right now. We'll get to that in a second, though. Round out the funding of the story. You did raise $3 million back in 2019 in a seed, right?
Yeah, that's right. That's right. It was a very small seed. Yeah.
Was that? Did you do that on equity, or was it a capped note?
No, it was an equity.
What was the valuation there?
It was in the 20s.
20. Okay, got it. So you had a nice valuation increase then from your seed to your Series A.
Yeah, no kidding. Yeah.
Yeah. And then when you raised a Series B from 33 million, what was that valuation?
So that one I won't disclose it, but it was a very favorable valuation. It was valuation. The Tiger Global is a wonderful company. They move very fast. They're very entrepreneur friendly, and they come in when they think you've passed that side where you're going to be successful, right?
Yep.
So they pay much higher than the A and C round VCs, who are still focusing on the risk and things. They think, okay, this is going to be a winner, and they invest in 50 winners. Maybe some of them may not make it, but overall with their portfolio it will work. So we getting closer to on the way to unicorn now with this kind of valuation we got. That's where we are.
Most, when Tiger does deals, to your point, they don't have an equity target they want to hit, like most Series B firms. They'll want to buy 10 to 20% of the business. Tiger will come in and buy 5% if they feel like you've got product market fit and you're going to be one of the winners. So is it fair to say you sort of sold between 5 and 15% of the business? Can we put that range on
it? You're going around to give you valuation. You're correct on the evaluation, and as I said, we are on our way to being a unicorn. So that's where we are.
Because I'm going to guess here, you haven't told me this, but I'm going to guess the only reason you would do a round unsolicited from Tiger in like 4 or 5 months after you raised a $15 million Series A at a $60 million pre is if there was a significant amount of secondary where you created liquidity. So how much of that 33 million is actually went onto the balance sheet of the business?
I know. So you're exactly right. There was some secondary. But I don't include it in that amount.
Okay.
Yeah, I know other companies do that, and they say it's an 80 million round, but I only the 33 million went into the company. There's the same amount went into the secondary.
Got it.
So because what matters how much money we have to deploy, but yeah, the same amount went to secondary. So my early investors, some of them exit. We actually have a little video coming of them being thankful. And they can because some of them came in very early and they did a 50 or 100x.
Yeah. So Nicolas, what I hear you say is this 30 million went on the balance sheet and the same amount went into secondary. So another 30 million was secondary. So the total check size from Tiger was more like 60 million.
That's correct. Yeah.
I see. Okay, that makes a lot of sense. So when you say you're on your way to being a unicorn, I mean, what revenue at the valuations you're currently seeing in the marketplace? What revenue do you think you have to hit to reach $1 billion valuation?
I would say that if we meet our plan by the end of the year, getting to 20 million, we'll be there. It used to be unicorns where somewhere you had to be like in 30 to 50, but now you see that the market has changed. And what has changed is that it's not like there's no question there's a lot of money and liquidity and so on, but I think we're all observing that the winners grow faster than you'd expected. So if you look at Gong, which is one of our customers and strong partner, if you look at Datadog and the public market, these companies grow super fast, much faster than you expected. So the valuation reflects this expectation, right? And
not just reflects it. It's not even close. Like if you look at a company like Gong and the revenue that they're doing, right? So I just had a meet on somewhere between about 120 and 160 million bucks in terms of run rate, but it's 250 million raised at a 7.8 billion dollar valuation. There are other companies that have 120 million bucks in revenue, but they're nowhere near a 7.5 billion dollar valuation because their growth rate is nowhere near Gong. So growth and net dollar retention are like the premium things that we're seeing drive valuation right now. Would you agree?
Exactly right. And our net revenue retention has always been very strong. We have customers like Ring Central is a strong partner, Intuit, and they keep expanding, deploying our solution in more use cases.
Are you above 150% net dollar retention?
We were before COVID. We dropped a bit, and we're getting back there.
Yeah. Okay, interesting. And if you peel that onion, what does gross churn, and then obviously we add expansion back, what's gross churn look like?
The more interesting breakdown is what is our net revenue expansion in the enterprise versus mid-market versus small business. Because a small business, we barely at 100. We have a churn that's very high. People come, they're not sure, they disappear, and we unlike other companies, we don't refuse to serve them. So we don't say, "Are you too small for us?" I see that Drift is doing that because they've had a churn problem. So they're trying to make their numbers look better. So they even refuse to take companies. We're nice people, if you want to work with us, it may not work out, but we'll work with you. So our churn is super high in this SMB, and so our net revenue retention is 100%. But our net revenue retention in the enterprise space is north of 150%, like that magic number you mentioned. And in the mid-market, it's in between. So, obviously, what we're going to do is work on all fronts, so make it more compelling for small businesses to get value faster out of the box, and of course continue selling to enterprise because our value is so clear. And
Nicolas, how many total customers today? You were at about 1,000 back in December, I think.
So we passed 1,000, but we are on that level. Yeah.
Okay, got it. And the reason I ask is I assume you're driving significant expansion again in an enterprise cohort. Don't name the customer, but what's the largest ACV you have right now on the platform?
It's $750,000, and I can't name the customer.
And what?
And I cannot name the customer.
Yeah, don't name them, obviously, but that's $750,000 a year in revenue. What enables you to drive?
750,
yeah. What enables you to sell so much? Is it number of seats? Is it utility-based pricing, feature-based?
Number of seats.
Got it. Okay, why go into the event space?
It was a request from our customers. They found that just like on the inbound thing, you want to get to the meetings booked as fast as possible, and that's where all the value is, right? Because in sales, in the B2B sales, meetings is where the value starts happening, right? You have people booking meetings. So we had all these events managers spending a lot of money to attend an event and sponsor an event. And then what they would do is scan badges, right? So scan badges is nice, but that doesn't get you pipeline. Yeah, then you have to follow up, email them, go through the same thing. So all of them realize that what matters is try to get meetings ahead of time and meetings on the floor instead of go straight to meetings, not these intermediary steps of scanning badges, emailing, campaign, and so on. So that's what happened. They came to us, say, "You're the meeting booking company. Can we help?" And when we found it, that's a bit more complex with events because you're not sure yet who's going to attend in terms of the reps, which reps you can send. You have meeting rooms that have capacity. You have other constraints around time. So we thought, look, we're good at solving complex problems. It's a real value creation. It's very aligned with what we do. Let's build an events. Now, obviously, the question was, would there be events? So online events, there's a lot of them. It's a smaller piece of what we do, because often people just sign up directly on a Zoom webinar and or hop in. Real world events are where we can really expose all the power of our platform, because there's a lot of complexity. So with meeting rules, with attendees, with rescheduling, with check-in calendar. And we had actually built a product in 2019, and we literally mothballed it. We move it on the shelf, say, up, you put it on the side, we'll pull you out of GitHub when the time is better. So we did. We got back the code, we reworked it, and we're relaunching, because we see in-person events softly but surely restarting, and we want to be there when that happens.
Yep. No, we're doing one on September 9th in Austin. I think it's going to be an important model for us. Talk to me about the engineering required to get this done. How many total engineers on the team today?
Okay, catch me off guard there. We must have between 20 and 30 engineers. Yeah, probably in the
20,
yeah.
What about sales motion? How many sales reps do you guys have with a quota?
Do you include SDRs with quota? Or you're only including a revenue quota?
It's up to you. Do you give SDRs a revenue quota or just a meeting?
We're about 20, 15. So 20 SDRs, 20 AEs, 15 AMs.
Got it. Do the AMs carry a quota?
Target, yeah.
Got it. So 40 between account executives, account managers, those 40 all carry a quota. Are they different quotas?
Yeah. Different quotas,
How so?
different structure. Well, the RAs, it's a bit different on the enterprise, but in the mid-market, RAs are focused on new logo acquisition. As soon as a meeting is booked, we assign an account manager, and the account manager has a job of expanding the account all the way to renewals and expansion after renewals. So the structure is very different of compensation to provide the right incentive for the goals that are different.
Yeah. What for your account executives when they are closing these deals? What annual quota do you have them on? Do you follow the $1 million and then a $200,000 on target earnings pay?
It depends between enterprise and market, and it also depends on the seniority of the person we're bringing on board. We have a bit unusual than other companies. We adjust the quotas based on the pipeline. So we said, look, if we provide you this pipeline, you should convert. We're very focused on conversion, right? We bring in people and say, your job is to convert these deals. So if you bring your own pipeline, you get compensated more because that's an extra. So that awesome, they can do that. But we're going to give you X amount of pipeline, and we expect Y in revenues. And so as we bring on new reps, we give them less pipeline, right? Because they get to learn, and therefore a smaller quota. So we have a gamut of quota. Yeah. It's a bit. I know a lot of companies say here's a quota, swim or sink, but that's not our approach. Our approach is to we're very focused on professional growth, and so we give a lot of autonomy, but we also give a lot of help. So if somebody has zero pipeline starting with, then they can't be expected to meet a certain quota. So the answer to your question is very nuanced, because we have a quota that varies from one rep to the other.
Yep. Nicolas, before we wrap up, I hear you might be buying a company soon. What's going on? Look at that curveball, guys. This is a straight face. So ChiliPiper is not acquiring any businesses in the next 6 months. So is that a strategy you're going to use with the $30 million of cash you just got, or no?
So I was perplexed, because it's definitely something we're considering, and I was just wondering how you could have heard it. But the answer is yes, opportunistically. So we're not on a roll up right now the way ZoomInfo is doing. We have a bit of a different approach, because our number one core value is help, and number two is innovate. So we trust ourselves to innovate and come up with good products, and that's what we focus on. So it would only an acquisition bring us if we found somebody particularly innovative in a particular space adjacent to ours. So that's what we'll be looking at. But it's not, again, we're not on a roll up. We're very much looking at opportunistically if that's something that could be a good complement.
All right. And you're not in acquisition talks with anybody else. We're not going to see you sell to Henry and ZoomInfo or the Gong crew in the next 12 months, are we?
That is not in our future. No, Alina and I have built this company. We're having a blast. We have 150 pipers. We promised them all that we're going to get our share price to $100 a piece so that they're all millionaires, every single one of them. And so we are focused on delivering that to our employees and our shareholders.
Love that. All right, let's wrap up, Nicolas, with the famous five. Number one, favorite book.
Or all across, or my favorite business book is Never Split the Difference. That's what we think. My favorite literature is actually War and Peace. I love that. The whole story of Napoleon and the battle with the Russians. That's fascinating.
Number two, Nicolas, is there a CEO you're following or studying?
Bezos.
Number three, what's your favorite online tool for building ChiliPiper besides your own?
Well, I have another tool called Time that you may have looked at to keep. It's a smart calendar to keep me productive. So that's my favorite tool.
What's it called?
Time. It's something that I started. Yeah.
Time. All right. Number four, how many hours of sleep do you get every night?
That's a great question because I used to sleep around 6 hours. And then Alina came up with that book showing me that it was a bad idea. It was detrimental to all sorts of things. So no, I'm closer to 7+.
You have to, is Elena still there? You have to get her to wave real quick so everyone watching the podcast can see her. Is she shy?
No, she's outside. Come
she's outside. Okay.
No, right. She's here. She'll wave.
Elena, come wave. She can't hear me, but there she husband-wife team, another one. We love it. All right. Nicolas, so obviously we know you're married. Do you guys have any kids running around or no?
We do a 6-month-old and a 2.5-year-old.
Holy mess. So you're traveling the world during COVID with 2 kids running a business that's, breaking $100 million valuation.
Breaking what valuation?
$100 million.
No, we're way above that.
Oh, I know. I just wanted to, so now I know it's above 60 million. Now I know it's above 100 million.
Much higher than that.
That's good. All right. So 2 kids, and how old are you?
I'm 55.
55. Last question. Something you wish you knew when you were 20.
I wish I had started immediately being an entrepreneur. So instead of doing consulting and all these other things, because it's such a blast. And I wish I had more faith in experimenting and being persistent. So it has happened a couple of times. I would think I would start working, I'd give up. And what I'm finding is that with persistence, and keeping on it, you will be successful. So I wish I had both the guts to start earlier and the confidence to stay at it.
Guys, ChiliPiper launched in 2016 with husband-wife team Nicolas and Elena. They're doing $650,000 a month in revenue back just about a year ago, less than a year ago, now doing almost double that as they approach a $15 million, $20 million run rate here at the end of 2021. They've got over 1,000 customers they're supporting. They raised their $15 million Series A back last year in November at around call it $60 million pre-money valuation, raised another $33 million for their balance sheet in a Series B earlier this year, took another $30 million in secondary, just to reward other early pipers, as they call them. They're over over 150 strong now, 25 engineers as they look to continue to scale, about to get into the events space, both virtual and in person. Nicolas, thanks for taking us to the top.
Thank you.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.